Brexit is incredibly relevant for you, Stephen. There's only a couple of months left before Britain's planned departure. You heard Sadiq Khan there talking about an extension. But you need to be battle-ready, as it were, or hard Brexit ready. How many people or how much headcount do you think at this juncture you would have to move from Nomura in London to be hard Brexit ready?
Well, firstly, Manus, we have to be prepared for every eventuality, and that includes, obviously, a hard Brexit. So in terms of actual people that are required to be within our Frankfurt operation, which is our new broker-dealer entity, we're looking to send somewhere between 50 and 100 people from here to not just to Frankfurt, but to the continent, as well as, obviously, the number of folks that we have hired there locally.
Stephen, you've spent your career, a global career, in various centres. How much of a fractionalisation for our domestic market in the City of London is this Brexit? Because once institutions like yours and Sergio Motti and Jess Staley move human capital out of the City of London, it's pretty darn hard to get you boys and girls back, isn't it? How dangerous is this to our ecosystem in the city?
Yeah, it's a great question, Manus. Mostly, we've all been used to being in one financial centre, mostly within Europe. And so therefore to have it fractured in terms of not just a talent pool, but also in terms of capital and liquidity, I think is clearly not a great situation for the whole European economy and for the European financial services.
Stephen, what do you, further to Manus's question though, I mean, financial centres are more than just their ability to passport, aren't they? They're a pool of people that have gathered together over hundreds and hundreds of years, and certainly that's the case in London. So, you know, there's a whole ecosystem around the financial services sector here that maybe doesn't exist as extensively elsewhere in Europe, whether that's in insurance or whether that's in complex derivatives or whether that's in legal services and the like. So what shadow of its current self will the City of London become? What are you planning for?
Well, look, I think the City of London has always had the ability to adapt and evolve and survive. So in that sense, I'm not concerned. What I am concerned about are being essentially two centres of liquidity in European products, in European-denominated products, sitting one within London and one within the continent. And I think having a basis between essentially the pricing of those products would actually be very damaging to Europe as a whole.
OK.
Stephen, oftentimes when we look at liquidity between markets and between centres, there's always the discussion about, you know, what liquidity risks we could have as a result of Brexit. Is that something that's particularly pressing on your mind? And I'm thinking in terms of splitting the business up between clearing, trading, execution, the various areas that we have across your world.
Yeah, well, I think, as I just mentioned, that is a great concern of ours, because I wouldn't see that liquidity fragmented. Equally, the cost for not just ourselves, but for every single European bank to have separate pools for capital and funding is actually, I think, very dangerous for many banks that are not in great financial health currently.
What kind of market event would a hard Brexit be, Stephen? What do you think it would look like? What are you preparing for on that front? If we get one, we might not.
Yeah. Well, I think it's hard to really fast forward to understand exactly what that would look and the impact on financial markets themselves, and whether exactly where cable would be or where UK interest rates would be. I think it's tough to predict. But look, I think there's definitely room for the currency to struggle in that type of environment. And clearly, I think there will be some flight to quality, particularly in UK gilts.